Hey everyone, welcome to our second in our series of reviewing the tax returns for the 2020 presidential candidates, their tax returns. We're taking a look at their tax returns, seeing what their income shows, what their taxes show, and just kind of getting a feel for what their tax return can reveal to us. And a lot of times that's not much. Sometimes it's quite a bit. If you missed last week, we did Mayor Pete Buttigieg. His was a pretty boring tax return as far as tax returns go. They made about $150,000, very little in the way of investments, business income, nothing like that. Today, we're going to do one that's quite a bit different. Today, we're going to do Senator Kamala Harris. I think I chose the two hardest names to pronounce between Mayor Pete Buttigieg and Senator Kamala. I had to, again, review several videos to make sure I'm saying it right, and maybe I'm still saying it wrong. If I am, apologies to the senator. And again, I just want to reiterate that these are not to show any type of you should or should not vote for this person. This is just to give you information. I know a lot of people like to see the tax returns of the presidents and the presidential candidates, hence the big controversy with our current president not releasing his tax returns. And I also know that the tax return can be very confusing. It's a 78,000 page tax code, and for a lot of people it's like basically a foreign language. So being a CPA, I wanted to tell you, kind of give you an insight into what the tax return is actually telling us. All right, so today, again, we're doing Senator Kamala Harris, candidate for the 2020 presidential election. And looking at this first page here, this is, again, just the basic information. We can see that she filed jointly with her husband, Douglas Emhoff. He is pretty prominent in this return, as we'll see later. And they claimed one dependent, the daughter, I believe it's Douglas's daughter, Ella Emhoff. We can see here that Douglas is an attorney, and obviously Kamala is a senator. So let's take a look and get into the tax return itself. This page is kind of the guts of the return, right? This is where we get all the actual income information. And as we can see on line 1 here, combined they had $157,352 in wages, meaning your W-2, you're an actual employee. And all of that comes from Senator Harris's, her salary as a senator. She made $157,000 to be a U.S. senator. Not too bad money, right? Line 2 here, where it gets interesting compared to Mayor Pete from last week, they made $2,288 of interest income, meaning money in the bank pays you interest, is typically where that comes from. And if you remember from last week, Mayor Pete made a grand total of a whopping $1 of interest income. So quite a stark contrast compared Senator Kamala versus Mayor Pete. Although, as we'll see, that a lot of that interest income here comes from her husband Douglas's business, which passes through to them personally. But still, quite a big difference. Line 3A is a little surprising. We have dividends here, and they only had $8 in total dividend income. Dividend income usually comes from investments. Okay, you have an investment in a stock that pays a dividend. At their income level, which we'll see here in a second, I would expect that number to be quite a bit higher. And as we'll also see, they don't have much in the way of capital gains income either. So what this tells me is they don't do much investing, at least relative to their income. And just to show it quickly here, line 6, we can see their total income was over $2 million. $2,043,967 was their total income. Okay, so pretty nice chunk of change to make in a year, and it just makes it more surprising that they don't have investments. Which, not that they don't have investments, we can see, as we'll see on the next page here, that they invest a significant amount in their retirement accounts, and retirement accounts activity will not show up on their tax return. So they definitely invest plenty there. They could also invest in stocks that they just haven't sold that wouldn't show up as capital gains, but we do know that they're not dividend producing stocks. But my guess is they invest much more significantly into Douglas's business, which we'll talk about shortly. So yeah, not much in the way of traditional investments. We can see here that they had some deductions, which we'll see on the next page, about $150,000, mostly maximum contributions to their 401k or their SEP. and then some self-employment tax deductions and health insurance deductions, which brought that income down to 1.8 million, almost 1.9 million. And then they had itemized deductions of $70,839, and we do have their itemized deduction schedule, so we can see what those deductions consisted of. So after all of that, they had total taxable income of $1,818,317. Okay, so again, very, very large amount of money. Very, very sharp contrast to Mayor Pete, who again had around $150,000 of total taxable income. And again, that doesn't, for some people, that's a great thing. Some people say, I want someone who's very successful financially to lead our country because I want to see that they've done it before. Other people say, how can someone who makes $2 million a year have any type of feel of what the average American's going through? Okay, so we all have our own thoughts, our own beliefs on that. My personal thought is I'm not too concerned either way. I want to know what their policy ideas are. But if you're concerned with that type of thing, one way or the other, that's where they were at, 1.8 million in taxable income. They paid $611,000, almost $612,000 in taxes for 2018. So when we say the rich don't pay taxes, they do pay a nice chunk of change in taxes. I certainly believe there's room to increase those in some ways, but they pay taxes. There's no doubt about it. And actually, no, I take that back. That 612 was just their ordinary income taxes. They also had other taxes, which consisted almost entirely of self-employment taxes from Douglas's business income. So their total tax bill was almost $700,000, $697,611. Okay, we can see here that they had $23,000 withheld from Kamala's W-2. They paid $540,000 in estimated taxes during the year. So they prepaid $563,426 in taxes. That left them with a tax bill at the time they filed their taxes of $134,185. I've had to tell people they owe tax bills like that, and it's not fun. But my guess is these Mrs. Harris, Senator Harris, and Douglas had the money set aside. All right, on this next page, this is a new page for the 2018 tax filing season. It's called Schedule 1, and this reports the income that's not from just a simple W-2. Right, so on line 10 here, we can see that they had $14,622 in a state refund from 2017. This is a little confusing, but essentially the way it works is you get to deduct your state taxes on your federal income tax return. But then if you turn around and get a refund, you have to claim it as income the next year. So it doesn't seem like it makes much sense, but it actually does make sense. They took it as a deduction one year. They got the money back, so now they have to claim it as income. We can see here that they had $320,125 in Schedule C business income. This came from Senator Harris's book, which we'll get to shortly. She made $320,000 net, meaning after all her expenses, she cleared $320,000 from those book sales. Line 13 here, we can see that they had $1,257 in capital gains. Again, a very small number at their income level. And then finally, the big one, the whopper, line 17. This is for Douglas's two business interests that he has, two different law firms, which I'll get into. $1,548,315. And again, those come from the business, but they're what they call pass-through entities, which means those businesses don't pay taxes. Instead, the income from the business gets reported on the owner's tax returns, and they pay the taxes personally. So Douglas's share of those two businesses gets reported on his personal return, and that's where they pay the taxes. Okay, so getting into some deductions here. Deductible part of self-employment tax is $33,188. When you have self-employed income, you pay extra taxes on it, an extra 15.3% Social Security and Medicare taxes. Then you get to turn around and deduct half of those taxes as an expense. It's a little bit confusing to hear out loud, but that's a very common deduction for someone that's self-employed. The big one here, line 28, they contributed $120,000 to a retirement account, some type of self-employed retirement account, whether it's a SEP or a 401k. I do find it interesting that it appears that he contributed on behalf of Kamala, which is, I don't know, that's a little strange considering I'm sure she has a retirement account as a senator. So it'd be interesting to see how that's structured. They had $1,623 in self-employed health insurance deduction. This is again a little surprising because you're only allowed to take this deduction if you're not eligible for a health insurance plan through either your or your spouse's work. And I'm sure they were eligible for one from the from Congress's plan. So there must have been some type of window there where a small part of the health insurance, one or both of them were not eligible under that plan. So that's what that $1,623 is. All in all, they had $154,811 in those deductions there. This next page here is it's one of my favorites to look at from these candidates. It's the itemized deduction, Schedule A, and this is going to tell us a lot of the deductions they took. Medical expenses, they make this almost impossible to take for someone at their income level. Basically, they'd have to be over $141,000 to take any. They did not. All we can tell here is that they put on their $2,688 in medical expenses. That's not near enough to take any deduction for them. This is the one that I'm sure they're not happy with under the new tax plan. It used to be that all of your state taxes, your real estate taxes, and your personal property taxes were deductible under Schedule A. There could be some limitations under AMT, but generally speaking, they were all deductible. All right, and as we can see for Kamala and her husband, this would be quite a deduction because they paid $201,715 in state income taxes. They paid $23,000 in property taxes, and they paid $447,000 in personal property taxes, meaning like vehicle tax and things like that. So they had $225,000 in items that would, in the past, have been fully deductible. Now there is a limitation of just $10,000. So that new tax plan essentially wiped out $115,000 or $215,000 of deductions from their return. So I can tell you that I would pretty positive that they are not happy with the new tax plan, and should Senator Harris be elected, I would put a good bit of money that would be one thing that they would target to change pretty quickly. Going further down, we can see that they paid a very large amount in mortgage interest. They paid $33,580 in mortgage interest. Okay, that's not their mortgage payment, which would still be pretty high for people in a lot of the country, but they paid that just in interest. So they have a very high mortgage. Very easily could be over $1 million in mortgage. And again, high relatively speaking. Some parts of the country that's nothing. My part of the country, that's a very, very large mortgage. And finally, this number is one that quite a bit of people are interested in for presidential candidates. They're charitable donations. And we can see that that Senator Kamala and her husband donated $27,259 to qualified charities, meaning like 501c3s, things that can be deducted on your tax return. And again, I want to stress that doesn't mean that they didn't give any more money away aside from that. That simply means that that was how much they gave to qualified charities. And yeah, I mean, it's a big chunk of money, but they also made $2 million. So it's all relative. When you do this, when you deduct these, you have to put a separate schedule showing what those deductions were. You can see here that it says Statement 11. Unfortunately, they did not include Statement 11 with the return. I would have loved to see where they donated, but we don't have that information. But all in all, we can see that they had $70,839 in deductible itemized deductions, whereas Mayor Pete did not even itemize, meaning they couldn't even come up with $24,000 in itemized deductions. So again, not saying one or the other is bad. It's just these are two very, very different candidates when it comes to their personal finances. On this page, we can see their breakdown of their interest income. As I said, they had roughly $2,000 in interest income. A little bit from Merrill Lynch, a little bit from Wells Fargo, but the majority of it is coming from this $2,000 from DLA Piper, which is Senator Kamala's husband Douglas's business. So that interest is flowing through from his business. Dividends, they only had a tiny amount, $8 in dividends, and again, it comes from the DLA Piper. On Schedule C here, we can see Senator Harris's Business, meaning her book, her writing. We can see principal business. They just put writer. This is for a book she wrote, and we can see that she received $732,500 of sales dollars. She sold $732,000 worth of books. All right, pretty awesome for her. Interestingly, we can see the only expense that she claimed was commissions and fees of $412,000. Now that is probably commissions to her agent, royalties she has to pay out, some type of commission that she pays out every time she sells a book. All right, very common. That's usually how it's structured. But we can see after taking that expense, she had a profit on those books of $320,125. So moral of the story, write a book that people want to read. You can make some serious money. All right, this page real quickly is the capital gains page. Since they had almost nothing in capital gains, we won't spend much time here. It doesn't show us what those capital gains were. But we can see they had $136 in short-term capital gains, meaning stocks they held for less than a year, and $1,121 in long-term capital gains, meaning they held those stocks for over a year. And the only reason these are noteworthy is because it's such a relatively small amount considering their income level. Right? So they choose to invest their money in areas outside of just a brokerage account. Okay, here's where we see the big numbers. These are for Douglas's businesses, all right? And I did a little research to find out what was going on here. But what I found was Douglas founded and used to be the managing director of a law firm called Venable LLP. Okay, so he founded this law firm. He's a partner in it. He was a managing director, I believe, at one time. And in 2017, it appears he left that law firm to join DLA Piper LLP, which is where he's at now, which is just a big law firm. We can see here that for DLA Piper, this line A here, his share of their income was $1,382,299. Okay, on top of that, line C here, we can see that he had $202,000, almost $203,000 of income come from the firm that he founded, that he used to be the managing director of. Now, I'm not able to tell whether he still has ownership in that. Obviously, he did for 2018. He had some type of ownership for that. I don't know how that's phased out since it appears he left there for this DLA Piper. But he still had some form of ownership where he was he had an income of $203,000. All right, so not bad to just get a nice $203,000 paycheck from a company that it appears you no longer work for. We can also see here that he had $36,933, so almost $37,000 in unreimbursed expenses from these businesses. And what an unreimbursed expense is means that you paid personally for an expense on behalf of the business, and the business never reimbursed you. So you get to claim that as an expense against this income. So it could be his car, his mileage. It could be a work trip that he paid for personally. It could be a number of things, but he paid for something personally instead of the business paying for it, and then he gets to deduct it in the business. But look, this page tells us, number one, that Douglas, Senator Harris's husband, is a fantastic lawyer. You don't make $1.5 million, almost $1.6 million in income from being an attorney without being an extremely good attorney. So he's good at what he does, and he has ownership in both of these businesses, so we can probably assume that he's a very good businessman. So if those things mean anything to you out of a would-be first man, that's what we know about him. He's an extremely good attorney and probably a very good businessman. Okay, the final schedule on this return I want to show here is called Schedule H. And you don't see this one very often because this is a schedule for when you have what they call household employment taxes. And household employment would be when you have a nanny or a maid or someone who's working significant hours in your home. Okay, I don't know the age. I don't think Douglas's daughter that they claimed on the return is young enough for it to be a nanny. So my guess is it's some type of maid. I guess maybe it could be an in-house chef, someone that works in their house and works so much that they have to report it on their tax return. And what we can see from this is that they paid this person $29,693, almost $30,000 for the year of 2018. to this person, and doesn't really tell us all that much. I don't know what would be noteworthy about it, other than it's interesting that they had someone that worked in their house that much. Actually, a lot more people should be filling out this return probably that don't. If you have a maid, a nanny, you're supposed to be filling this out, and a lot of people don't. So all this really tells us is that they're doing it correctly. So that's it. That's all I have for Senator Kamala Harris and her husband, Douglas Emhoff. Hopefully I'm saying Senator Harris's first name right and her husband's last name right. If not, I apologize to both of them. I'm sure I'm not butchering it any worse than I did Mayor Pete's name last week. This obviously was a very different return than last week. They had over $2 million of income. So, I mean, it's really up to you. What does that tell you about them? Does that make it? Do you like to see that? Do you like that out of a candidate, that their husband is a successful business person and that she's a successful author? Is that meaningful to you, or would you rather have someone that makes much closer to your income level, that can maybe identify with your needs more? There's cases to be made for both, but this is why we go through it, so you can see what they have going on. Next week, we are going to do Senator Cory Booker's tax return, and his is kind of somewhere between the first two, somewhere between Mayor Pete's and Senator Harris's. All right, so hopefully you enjoyed this, and we'll see you next week.